The government is set to infuse over 28,000 crores in 7 PSU banks that are under the RBI's prompt corrective action framework as part of its augmented recapitalization plan. Let's do a three-point analysis on who will be the beneficiaries and will it help improving the financial situation of the banking industry. 1. Which banks are likely to benefit from capital infusion? Finance Minister Arun Jaitley last week said that the government will infuse 83,000 crores in public sector banks in the remaining months of the current fiscal. According to recent reports, out of the total amount, over 28,000 crores will go to 7 PSU banks before the end of this month. Reports also suggest that Bank of India is expected to receive the highest recapitalization amount of over 10,000 crore rupees, while Central Bank of India is likely to get around 1,600 crore rupees. United Bank of India will be recapitalized with about 2,100 crores and Oriental Bank of Commerce will receive about 5,500 crore rupees. Bank of Maharashtra will get nearly 4,500 crores while UCO Bank will get a capital support of over 3,000 crore rupees. Also, Syndicate Bank will be recapitalized with 1,600 crore rupees. 2. What is this recapitalization aimed at achieving? Well, 11 out of the total 21 state-owned banks are currently under the RBI's PCA framework, which has severely limited their lending and deposit-raising operations. The government hopes that with the fresh round of infusion of capital, 4 or 5 banks will be able to exit RBI's PCA framework. PSU banks have been facing a massive problem of non-performing assets or bad loans. As of 30th of September 2018, NPA stood at over 8.7 lakh crore rupees. If banks do not have adequate capital, they cannot lend, and this would dampen the economy. With a fresh round of infusion of capital to PSU banks, the government expects that lending to the industry, in particular small and micro industry, to grow. 3. Will bank recapitalization solve the issue? Well, recapitalization could give the banking system a good breathing time to enhance its credit portfolio and restore value out of the NPA accounts. But we have to bear in mind that when banks lose money or when the government recapitalizes banks, it is all people's money, which should be used for people's welfare and not to fund the bad loans. The government has been hinting at using RBI's excess reserves to recapitalize banks as well. Now, this has been a big bone of contention between the RBI and the government. That said, recapitalization is a temporary solution and only treats symptoms and not what causes these symptoms.